Okay, hello everyone, and welcome to our first webinar on Insurtech. The session is hosted by INSEAD alumni with the TMT group on Zoom. Thanks for the opportunity for me to present. Today we have a few people in 30 different countries attending the call and asking about 100 questions about this topic, so we have a lot to cover. To start with, there is my great pleasure to invite Roger from DIA to talk about Insurtech trends. Who is Roger? What is DIA? I'll let him introduce himself, but I can tell you three things. When you Google for Insurtech trends 2018, you cannot miss his article. It was ranked #1 for many months. When you look for the most amazing conference on Insurtech startups, then you cannot miss DIA starting in May in Munich. And when you search for top influencers in Insurtech on the web, then you cannot miss, of course, Roger. So, Rogers, floor is yours.
Thank you very much, Min. First of all, thank you very much for your kind introduction. A few slides about myself. The top left picture is the beautiful city of Utrecht. That's basically where I live and where we have one of our offices. And the other one is in Barcelona on near Plaza de Catalunya. And my background is a mix of Italian, Dutch, and Indonesian. So that's reflected in the two other pictures. And what my parents brought me is the love for good food and for travel. Now, on a professional side, I also authored, together with Reggie de Phoenix, 2 books. One is called Reinventing Financial Services, which did pretty good. 100,000 copies sold in eight languages. And last year we launched Reinventing Customer Engagement, and that is now also being translated or already on the market in German as well as in French. Min, you already mentioned DIA. What we do there is connect insurance executives with Insurtech leaders from all over the globe. In just 2 days, we bring 50 handpicked Insurtechs on stage, together with 5 thought leader keynotes. And this year's keynotes will include, for instance, Tom van den Brulle of Munich Re, Volker Büttner of Generali, Reza Khorshidi of AIG. Last year we had 850 attendees in Amsterdam, and we accept the same kind of crowd on the 16th and 17th of May.
Thank you, Roger. So let's start with the first set of questions. We received many questions about the role of insurance companies in the future and how they would lead innovation. Can you tell us more about the winning insurance firm in the future, what it looks like, what kinds of elements you should need to take into account, and what specific trends to tap into to enhance the digital strategies?
Well, you put it quite carefully. Whatever trends, they always should be read in the context of what this winning insurance firm of the future would look like. And so let's stay with that subject for a little moment. I think these are the challenges that we all can relate to when it comes to incumbents. There is margin pressure, regulatory scrutiny, saturated markets in many parts of the world. And what we've seen is that, there's a choice. Either you swim or you drown. And most insurance incumbents decide to swim, which is good. And the way they do it is using digital transformation. And this basically is the first characteristic of this winning insurance firm. It is operational excellence. Cutting down costs, there's still a lot of room for that. Innovating the current processes to make sure that you actually become more operational excellent and create a solid foundation for the future. Now, having said that, we are quite convinced that this is just not enough. It's good, but it's not enough. And the reason why it's not enough has to do with 3 developments that we see. There are more, but for the purpose of this webinar, I selected 3. And the first one is all sorts of new entrants that come to the market. Now, many say when they look at new entrants, they are not winning much market share, so we should not really be too upset about those. But we think there's something else taking place. And to explain that, let me use the example of Uber. We all know Uber, And of course, everyone asks, okay, when is the insurance industry going to be Uberized? But the real impact of Uber, for instance, in the city of Amsterdam, is quite different. In terms of market share, they only got limited market share so far. But the impact is that they changed the level of expectations of customers. And what you see is that the incumbents, in this case the traditional cab drivers, really need to step up the plate. So what we've seen in Amsterdam is that now the usual cab drivers need to become much more friendly, and they need to arrive on time much better. So that's the real impact, new entrants and how they change customer expectations. The second trend why we think that operational excellence is not sufficient has to do with the changing customer behavior. I think that many of us know what Tinder is all about, and I think that how this has changed customer behavior in such a short time, that's really humongous. Already today there are billions of swipes every day and tens of millions matches every day, and it just shows how getting connected, dating, has changed in such a short period in time because of technology. And the third reason why we think that operational excellence is not sufficient has to do with the fact that everyone needs to differentiate much better than ever before. And what we've seen is that when products become more at par, then we see that it's more difficult to differentiate on the product. And we see that the points of differentiation actually shift. And this is a real challenge. On the floor, on the ground, you see Michael Owen. This is an old picture from a game between Manchester United and Liverpool. And he just missed. And he raises his hands to his head. And what you can see in the audience is that everyone is doing exactly the same thing. This is because we got so-called mirror neurons in our minds, which really urge us to copy the behavior that we see around us. So if someone yawns, you start to yawn as well. I think we can all relate to that. Now, the funny thing is that when you look at the way that insurance companies are looking to innovate, we see the same thing happening. Everyone is copying each other. So take, for instance, pay-as-you-drive concepts. Well, we see that everyone is copying exactly the same concept that others are introducing in the market. So these are three challenges why we think operational excellence is not enough. It's just really a qualifier, not a winner. Now, what you need to do is build on top of operational excellence three extra elements to become really a winning insurance firm of the future. And the first one is to become always part of life. All sorts of sensors, connectivity, connected devices make it possible to become much more part of life than we usually are until now. Take, for instance, what AT&T is doing in the US with their Digital Life program. They provide all sorts of sensors to their customers, and that allow these customers to manage their household much better than they ever did before. Just check at distance whether the doors are open, whether the stove is off, home security, whether the doors are locked, etc., etc. This is a big thing, and it of course allows you to increase your contact frequency with customers far more than you're currently doing, and to provide new added value to empower your customers. Those are winning aspects for this winning insurance firm of the future. The second characteristic that deals with customer engagement has to do with contextual ecosystems. I'm a runner, and I really like to use my my Nike app, not only because it shows me how much I've run so far and what my friends are running and how I do compared to them, but also because it provides me all sorts of tips where I should run when I'm traveling, all sorts of new routes which provide really new added value to me. And to be quite frank, I don't care if they would offer me a new pair of shoes from time to time just because they know how much I've been running over the last month. Now, the nice thing what they do is that they've opened up their data to allow other companies, young companies, to create new solutions inspired by the data that is created by Nike, by the Nike Fuel app. And Sprout is just one of the many companies that tap into that opportunity. And they offer actually corporate wellness solutions that leverage social tools and game design, basically to help employers, motivate their employees to stay more healthy. And of course, that at some point will reflect in lower premiums, but also in less sickness, less disability, and things like that. The third trend is simply human. I was actually visiting a Starbucks lately. I had to pick up my wife from the airport, and there were only two people in that Starbucks. The guy in front of me ordered a double espresso, and when the girl behind the counter asked his name, he said his name was John. And I had to order a double espresso as well. So at that point, I thought, hey, why not say that my name is John as well? So I said, double espresso, just same as the previous guest. And I'm John. And from that moment on, the girl behind the counter and her colleague, they didn't know what to do anymore, which was pretty strange because there were only two people in the room asking exactly the same thing. It just shows how procedures, although they are meant to become, to create a more personalized experience, actually result in a less personalized experience. And this is also what I encounter when, for instance, I use Netflix. This is actually my screen on Netflix. And I think that many of you will have the same experience. I know for sure that when I click at Goodfellas, that probably the next tip that I'm going to get is going to be The Godfather or some other mafia chronicle. Now, the same is happening also in insurance and in financial services in the broader context. We start to realize that like personalization is always defined as offering personal offers based on personal data, and we tend to lose the real meaning of what personal is. The same is also true for social. When we speak about social within a financial services company, we always think the use of social media, but we forget what the real meaning of social is about. And this is something that we need to put back into the equation. Social and personal, meaning things like walking the extra mile, recognizing a customer, doing something a bit maybe beyond the boundaries of what you can do, a listening ear, surprising someone. And this is something that we need to do, which is very difficult, of course, to create with digital technologies in itself. So we think that the real added value should be to combine digital technologies and empower frontliners in your company. So that's basically the meaning of simply human. An example, this is what London and Country is doing in the UK. They actually got artificial intelligence applications supporting their agents to create better conversations with their clients. And these better conversations, of course, lead to higher customer satisfaction ratings, and also, of course, better conversion rates. So this is the way combining human talents with artificial intelligence in this case. That should be the way to go. Now, all this combined leads to these characteristics of the winning insurance firm of the future. We think that operational excellence is very important, but we need to be aware that it's really nothing but a qualifier. And on top of that, we need to build that winner, and which consists of being always part of life, creating contextual ecosystems, and acting simply human. And this is, of course, all written down in this little booklet that we wrote recently.
Thank you, Roger. Okay, very good overview on the framework. Let's go more to specific trends. You wrote about 10 trends, and let me ask you or reflect some about the question I received. I have some question about how insurance can become more partners such as payers. This is because users want to have more services nowadays with their insurance. Can you provide some data-driven services? And this question comes from the UK and Austria.
Yeah, so looking at those top trends, this is really the first trend that we distinguish, and you're absolutely right. It also taps into this first characteristic of the winning insurance firm. In order to really become part of customers' daily life, we got these new data streams and from connected devices, and we should use them to turn them into new insights and turn them into new propositions and services. The flow is an example of an Insurtech that is well, really a poster child of this trend. They actually designed telematics systems to make vehicles safer and cheaper for all. And they created this platform called Go with Flow, which is a platform for car sharing. It's sort of an Airbnb in cars, and they actually rate the owner or borrower of the car, just like Airbnb is doing. But where the platform differs from other examples of car sharing and vehicle lending is that it actually uses the Flow telematics engine and scoring system to track behavior, but also to develop a score for the driver to help lenders decide who to lend the car to. So it's a new capability that they offer, and they're actually launching this together with insurance companies to bring this proposition to the market. Well, another example is HeartShield from Austria, and they actually created an artificial intelligence platform that uses patient data to recognize risk factors and determine whether someone is a potential candidate for a heart attack or heart failure in time. And instead of using last century statistics, they allow computers to learn warning signs autonomously, using data from all sorts of devices that can measure heart rate, including smartphones, smartwatches, but also clinical or portable ECGs. Now, and it shows, peer reviews shows that looking at scientific research, what they created offers better predictors in detecting heart disease than, for instance, blood type-based risk scores. Well, and a third one for this trend is what we see taking place at Arity. Arity is a company launched by Allstate, one of the largest car insurers in the US. And based on the data that they got from connected cars, they decided to launch a totally new business, focusing on data, using outside sources of data, combining those and creating new kinds of services. And we're very curious what they will present to the market in terms of new services. We can think of things like that relate to maybe even urban planning, but also finding your way to an empty parking space or whatever. But these kind of data-driven services, that's really something new, and they all tap into the real problem behind the financial problem. So it's just like the difference that like people want a house and they do not need a mortgage. The same is true for those data-driven services. We need to be aware of the context and create those services in that particular context.
Okay, thank you. Another question coming from the Benelux. With the impact of fintech in insurance, we have questions about new insurance services built in your purchasing experience. So can you illustrate with a few examples that particular trend or questions?
Yes, this is an important trend as well. We already see this taking place, for instance, in machine-to-machine payments. Amazon is doing this with Dash, but also think about how you pay for a ride with Uber. You don't really pay to the cab driver. And also how you pay for a song at iTunes. That's not really something that you need to do. It's already been taken care of. And we can also see the same thing happening in insurance. You purchase a product and the insurance is already in there. For instance, customers purchasing the BMW i3 or i8, they are entitled to a 7-day free of charge comprehensive car insurance from BMW car insurances. And this is simply activated over the phone by the customer. And of course, customers are then provided with an overview of insurance options available to them after their 7-day free policy has expired. And this is all designed and backed by Allianz. So insurance totally invisible. Another example is what we've seen presented by Diamond Award winner Cover from Belgium. And they actually built an insurance as a service platform to change the way that insurance is designed, managed, and also distributed. They're actually a cover holder of Lloyd's of London, and they act as a sort of a digital wholesaler of proprietary white label insurances. So they really target other non-insurance large distributors from any business. Could be automotive brands, could be utility companies, could be e-commerce merchants and traditional retailers. And they seamlessly integrate insurance into these products via open APIs.
Okay, next trend, it's about upstream platforms. So those invisible insurance services are creating from pull strategies versus push strategies. We also see a lot of links between fintech, proptech, insurtech, and any asset management tech domains. Would you confirm that with an illustration, the question comes from China, Hong Kong, and Germany?
Yes, to give you an example from China, actually, this is basically what Ping An has adopted as the strategy. They adopted the strategy of synergistic development of traditional and non-traditional businesses. And this is, for instance, Ping An Fan. It's the largest real estate e-commerce platform in China, and it's also part of the Ping An group. So the business model integrates real estate plus internet plus finance. And it seamlessly includes a wide range of financial services in the customer journey of buying a new home. They are creating all sorts of portals in non-traditional domains, such as home, health, car, but also food and entertainment. And each one of them creates new value for themselves, but also for Ping An. They all have a large number of customers, interactions, and also use data mining and precision marketing capabilities to, whenever relevant, at a logical moment, customers are brought into contact with Ping An's traditional banking and insurance activities. So they are not only building their own value, but by enlarging the total customer base and by allowing new synergies, they also increase the value of the entire ecosystem. Now, so they're moving upstream, and this is also what we see Abracar of Allianz doing. It's actually the first professional car broker in Germany, so launched by Allianz, and they help consumers to sell their car at the highest price without any effort. And Abracar takes care of all the steps of selling process, starting by creating a professional expert's report over 50 pictures, writing an attractive listing, and things like that. Now, in Belgium, something else is taking place, the same domain, but from a different perspective. Mobly, which is launched by Baloise, is actually taking the perspective of the buyer of the car, because there are always so much uncertainties, when you buy a second-hand car, whether it's good maintained, what the cost of ownership are, and Mobly is exactly tapping into those needs and offering a solution for that. So upstream platforms is about going to the places where the real problems occur and become relevant there, and then seamlessly go to, for instance, the insurance sales.
Yeah, I like the convergence between finance, real estate, and insurtech. In general, between finance and insurance, so can you provide insight about the impact of bank and insurance covering converging trends? Sorry, the question comes from the UK and from France.
Yeah, we expect a total revival of bank insurance. One of the things that's currently taking place is the new Payment Services Directive by the EU called PSD2. And this directive makes it obligatory for banks to open up customer data to third parties. Now, originally, the intention was to increase the competition between banks to improve payment products. But what we see happening is that it effectively creates opportunities to all sorts of new parties to provide new opt-in services to these customers. And although this is hardly on the radar screen of insurance carriers, we believe that this will really revamp the bank insurance model. So what we see there is moving from bank partnerships just for distribution and using bank data in the marketing and underwriting process to really becoming much more closer to customers. And actually, this was also confirmed by Marcus Petrelwieser when we spoke to him on stage at DIA 2017. Now, two examples. On the left-hand side, you see SafeUp, and this is a financial solutions business launched by Munich Re, and they created a variable annuity product concept called SafeUp, which is basically a first attempt to revolutionize the savings life insurance market space in Europe. And they offer these products, also via banks, for instance. On the right-hand side, you see Strands, and what they create is they're basically a provider of personal financial management solutions, PFM, for banks such as Barclays, BBVA, and Deutsche Bank. And PFM uses payments and other data to help customers understand the financial situation, give some tips about how to better manage finances, also prevent overdrafts, and improve wiser financial decision making. Now, PFM is driving engagement between banks and their customers, and although Strands is a fintech rather than an Insurtech, we see that there's a lot of development now taking place to also including insurance solutions into this equation.
Thank you. Next, it's that one of the key technology trend is the integration of collaboration between multiple services, example that you've shown before. And so to answer insurance problems, you cannot match one or several tech at the same time. And could you help in providing some insight, especially in Germany and UK, plus Benelux, where the integration of several technology could work?
Yes, I think that we've been inspired for these trends by research by Alexander Brown and Florian Schreiber of the University of St. Gallen. And they argue that real innovations require more than just one new technological improvement to really unlock new economic value. So in their idea is really about the combinations of innovative new models. And we actually see this taking place now also in the DIA community. For instance, we saw that Casco from the UK, a company that supports companies by offering an API-empowered agile insurance product platform that sort of sits between digital customer touchpoints and legacy IT. They actually teamed up together with Picture from Germany. And this is a company that creates smart AI solutions for the insurance industry, to create a totally revolutionary watch insurance product for Baloise, the Swiss insurer. Now, what we also saw taking place is at the same conference, the combination of Sentience teaming up with Surify. Sentience is a data science company out of Belgium that turns IoT sensor data into the right insights about people's behavior and real-time context. And Surify actually created a platform that engages customers over their lifetime. And just by combining the two, they created a platform that combines sort of the wizardry of sentience technology and extrapolates behavior insights from the diversity of mobile users data, and then show the full circle that Surify provides by turning these insights into buying signals and engagement opportunities. So if you combine innovation, it really multiplies.
Thanks. Let's talk about competition. Trends in Insurtech now reach a very large number of insurance companies. Some of them decide to collaborate to better compete. Can you have an example for that particular trend?
Yes, I think like this. We are so obsessed with competition that it makes it difficult to think of how we can cooperate with competitors. And this is where we see the ultimate taking place in Germany, where 12 insurers ranging from multinationals such as Allianz, Generali, and Munich Re, to domestic players like Versicherungskammer Bayern, LV 1871, and Nürnberger Versicherung. They all put money into Werk 1, which is an incubator that already supports 10 Insurtechs located in an old cookie factory in Munich. And because these insurers are convinced that it's all about creating a stronger ecosystem, they launched the Insurtech Hub Munich in July 2017. The Insurtech Hub Munich initiative is really, in our view, unprecedented in terms of that 12 insurance companies, big and small, are working together with the state of Bavaria, with the city of Munich, as well as with blue chip corporations from other industries, such as automotive, healthcare, and cybersecurity. And we think that that this is the way to go. Cooperation between insurance companies, but also with other stakeholders to really foster and enhance innovation.
Great example. A question from the US now. Is it better for an Insurtech startup selling insurance products to be distributed by Amazon or Allianz? Meaning, would retailer disrupt insurance distribution in the future?
Well, I think the most important thing that we need to see here is that innovation has gained so much speed that it also makes it so much more important to create a scale much faster than ever before. But what we also see is that scale economies get an extra meaning. It's not just about creating ever-growing efficiency in processes, but it's also about ever-growing added value through what we call network effects. Well, network effects can, for instance, be created by leveraging the growth and activity of established allied platforms. So take, for instance, PayPal. PayPal really grew on top of eBay. Now, this is really a great strategy, and we see that being implemented also by others. We also, for instance, see that the way that AXA Group is engaging with partnerships, in partnership with companies such as Alibaba, Uber, and for instance, the car sharing platform BlaBlaCar, it's really a clever choice to create such network effects. They're all fast-growing digital players, so AXA's business with them will almost automatically grow as well. And for instance, Cover, that we mentioned previously, they also leverage the size and the scale of the non-insurance distributors that they're partnering with. Now, another example is for instance, what's taking place on Singles Day in China. This is most of us probably know it. It's sort of Valentine's Day, but you give something to yourself. It's on the 11th of the 11th of last year it took place, and only on this one day, as you can see here by the numbers, close to $25 billion was sold on Alibaba. And the reason why this is so interesting is that ZhongAn teamed up with Alibaba's online shop Taobao to create a shipping return policy almost seamlessly integrated into every transaction. And they were selling like hundreds of millions of policies. So again, they're using network effects, the scale of others, to scale much faster on their own product portfolio.
Let's talk about AI. User wants more services with a human touch in times where AI it's everywhere. So how do you see this? I mean, machine versus human. This is a question from the US and Germany.
I think that like when I described the four characteristics of the winning insurance firm of the future, we already said that simply human, just using technology to empower frontliners is important. This is also one of the key trends for 2018. Two examples of companies that are tapping into this trend. On the left-hand side, SailMove. They're a company from an Insurtech from the US, and they provide solutions to create really high-touch, an in-person customer experience online. They enable, for instance, life insurance brokers to interact with their online customers in real time through voice, video, and collaborative browsing. And this again leads to better conversations, better customer satisfaction rates, and also increased conversions. On the right-hand side, VFox, a Diamond Award winner from Germany, that combines traditional personal advice of a traditional insurance business with modern app technology. So they're bringing together the evolved needs and expectations of customers with insurance brokers and insurance companies. They believe, VFox, that to pull the entire industry into the digital age, it is important to use digital also in what we should consider the traditional face-to-face challenge. And they're quite successful. They already have like 150,000 end customers and over 600 brokers in 3 countries using their tools.
Yeah, I met the CEO of WeFox in Berlin. He's amazing and it's very straightforward. But there's another CEO I never met. It's the CEO of Lemonade. I mean, you managed to interview him. He did one of the biggest fundraising, if not the number one fundraising in the Insurtech world. Can you comment on his view about behavioral economics in the US and Switzerland?
I think that this may have all started with the ongoing success of Discovery, the South African health insurer, and in particular their Vitality program. We've seen that their success is creating more and more awareness for intelligent combinations of data and behavioral economics. And I think that Adrian Gore, the founder and CEO of Discovery, also explained in our latest book, if you promote healthier behavior, at some point you can offer more sustainable insurance. And there's of course much sense into that. And behavioral science says that people need incentives to change. And what we see is that, looking at, for instance, the Vitality program of Discovery, that it on the one hand tracks everything from physical activity to nutrition, but it also gives a sufficient number of incentives to make sure that people really work on their health and make more healthy choices through sort of tailored programs. Now, Lemonade is sort of the poster child of Insurtech currently, and what they did is combine behavioral economics also with artificial intelligence. I think these are the 2 pillars, as Daniel Schreiber also explained in the interview that we did with him. So on the one hand, he's replacing brokers and bureaucracy with bots and machine learnings. But also on the other hand, he uses behavioral economics. And he does that not only in the business model, but also in the whole product flow. The whole product flow is really informed by behavioral economics. So he explained, for instance, that they ask people at a claims form to sign on top of the form, not at the bottom. Because behavioral research shows that asking people to pledge honesty first results in forms that are much more accurate and much more truthful. Dakadu is another example who is using behavioral economics. They say that customer engagement is becoming more and more important in health insurance firm, and they created a mobile health engagement solution, enabling individuals to track, manage, and benchmark their health and well-being in an easy and fun way on their smartphones. And again, it's about incentivizing them also, and not only giving feedback, and this really stimulates. So yes, you're right. Behavioral economics is going to be a key driver in the years to come.
Thanks. Last question, coming from Asia, would Insurtech be the new distribution channel for insurance company, especially obviously in Asia and in the US?
Well, I think that we think that there are opportunities, not just like looking at Insurtech as a new distribution channel, but really leveraging Insurtech to reposition the industry not only on the dimensions of customer-centric business models, but also to reboot themselves as a force for good in the communities in which they operate. We see that more and more insurers leverage Insurtech to tackle important global challenges today and in the future. So take, for instance, connected devices and the advanced algorithms that are already improving patient care, while simultaneously decreasing costs. This is, for instance, Alm from Japan who is doing that. Think about, for instance, Insurtechs that assist in helping to offset the damage caused by natural disasters, such as hurricanes and floods. What we also see is that Insurtech strike the right chord among millennials that are dangerously underinsured. For instance, Neo Insurance from Italy is doing that. But we also think about micro insurance solutions that are offering protection to low income populations that are previously considered uninsurable. So there's a lot of opportunity there. We're currently actually engaged in a research that we do for Newsweek, and where we invite insurance executives from all over the globe to share their view on how Insurtech can reboot and reposition the industry as a force for good in all the communities that they work in.
Wow. Well, that's the end of my the questions. I mean, thank you, Roger, for your time. Before we move to Q&A, can you tell us more about DIA and what we're going to see there?
Yes, I can do that. Just briefly. Expect on the 15th and 16th May in an awesome venue. This is the Westergasfabriek in Amsterdam. All sorts of Insurtech solutions, from advanced analytics, microinsurance, blockchain, millennial concept, distant patient care, in health, general insurance, as well as in life. What we see is that there will be a lot of Insurtechs on stage from already 26 countries. So expect a very international crowd, not only in the lineup but also in the audience. And yeah, this audience, they will not only listen to all those speeches, but also enjoy some great networking, not only inside in the venue, but also outside. And of course, we always expect nice weather in Amsterdam.
Okay, thank you, Roger. Now we move to Q&A.
Just one last remark, because we're really honored that everyone took the time of listening to this webinar. So we'd like to offer them also a special discount code. Just type in DIA 2018 and say out 200. And then you'll get a €200 discount on your DIA Amsterdam ticket.
Thank you. Thank you. Okay. Well, thank you, everyone. Bye.